Hi, I'm Sapan Ghai, Chief Commercial Officer for Sovereign Metals Limited, which is an ASX name listed company. We're developing the Kasiya rutile graphite deposit in Malawi. The deposit, the resource, the project is world-class, tier one, amazing, all the superlatives above, and hopefully you'll understand exactly why with this discussion we're about to have.
Well, look, I do want to talk about rutile, but I also want to talk about graphite. If you don't mind, you put out a press release today, and that's what kind of attracted me to this, because that whole EV narrative is, continues to grow and grow and grow. Whatever the equities market is doing, the train has definitely left the station, or the rubber is at the road, probably be more apt. Tell us a little about the news from this morning about graphite, if you don't mind.
Sure. So we announced this morning that we got the results back on some test work we had done on our graphite, which is, for all intents and purposes, we call a co-product of manufacturing the rutile out of the deposit. The test work was to see whether this graphite works well in lithium-ion batteries and therefore can be used within the EV ecosystem. I think George Orwell wrote that all animals are equal, but some animals are more equal than others. And I think the same applies to graphite. All graphite is obviously carbon, but only certain types of graphites can be used within lithium-ion batteries. We want to make sure that ours at Kasiya can do that. And the two things we tested for were crystallinity, which is all about how conductive it is electrically, and purity, because you don't want any nasties in your battery. Otherwise, your battery life cycle, the chances of it being recharged over a number of times, all decreases. So what we found was we have near perfect crystallinity, right? So
what's that mean? What's that mean, Sapan? Near perfect.
So that means if I'm producing a battery, and I want to produce a battery that actually works better than anyone else out there, I'm going to get as perfect crystallinity, as perfect electrical conductivity of these little hexagonal particles of graphite in my anode, in my negative piece to the battery, right? And what we're saying is our graphite does exactly that, right? So when it comes to graphite going into batteries, what we're hoping is we're at the top of the list when it comes to being able to supply that type of graphite.
Right. Okay. And take this the right way. You've got the world's largest rutile deposit. So if not the largest, certainly one of the world's largest rutile deposits. And it's the thing that you kicked off this conversation with. But you could argue right now, at this moment in time, the market is very much focused on this EV revolution. Graphite's going to be way more interesting to lots of people than perhaps the rutile. And I appreciate you can probably remind us about the economics around the rutile. But how do you advance and move the graphite component along, given this narrative that's going on out there?
Yeah. So look, remember the legacy behind Sovereign Metals. Sovereign Metals had been in Malawi since 2012, actually looking for graphite, and we had a number of small graphite projects. The Malawi graphite project being the most advanced. That was undergoing a definitive feasibility study. And what we found was, while we were doing the bulk test work, people started asking, well, why is there a lot of titanium in the tailings coming off this test work? And we went out and we tried to find out the answer to that. And as I like to say, we ended up tripping over the world's largest rutile deposit. But within that rutile deposit, there's still graphite, right? There's 1.4% of that deposit is graphite. This type of graphite that we've just tested now and got these wonderful results for. So we've got that legacy historical knowledge already, that knowledge base. We had been testing the Malawi graphite, whether it works in lithium-ion batteries, back in 2016. Right? So given that this type of, to get graphite qualified for lithium-ion battery use, for use in electric vehicles, it's like a 3 to 5 year process. We started that in 2016 with the Malawi graphite. What we do know and what we've seen and what these results point to is that the Kasiya graphite reacts exactly like the Malawi graphite. So we're almost way ahead of the pack here when it comes to looking at what our graphite is going to look like and do in a battery, and therefore, we want to be knocking on the doors of the right people very, very soon.
Right, but just again, remind me in terms of the logistics of this. It's not a case of one or other. These things get mined at the same time, and you extract at the same time. Is that the way it works?
Same time, same deposit, the neighbors within the material, right? The only nuance is the rutile is higher grade at surface and slowly declines in grade further down. When I say further down, I'm not talking hundreds of meters down. I'm talking like 5 meters. I'm talking 10 meters, right? It's what you could do in your garden if you really wanted. With the graphite, it's an inverse relationship. So the graphite's quite low grade, but as we go down, further down, we get higher grade rutile, so higher grade graphite. So because of that inverse relationship and because of the economics, it makes sense to just take the whole kind of 10 meters or so off the top, having removed 30 centimeters of topsoil if required. So yeah, look, we did a quick scoping study on all of that and what that looks like if we mined it, and we looked at the economics of that. And at the time, we had done the scoping study basically looked at, okay, if we mine this stuff for 25 years, if we put through 25 million tons per annum of the material, what are we getting out in the back end, and what does it mean in terms of real hard cash? And what we found was we'd be producing about 250,000 tons of rutile and about 150,000 tons of graphite, an NPV of $1.5 billion US. And that's off the back of under $400 million of capex. So almost like a 3-to-1 ratio of NPV to capex there. 36% IRR. Crucially, for those who worry about clipping coupons off mining companies, we're talking an EBITDA of close to $400 million for 25 years, right? That's $400 million per annum.
Okay, so the economics. In fact, you're moving into PFS phase now with the recent mineral resource estimate. I guess that kind of underpins the basis of that PFS going forward. But so, what's the timing on those? That update of numbers?
Yeah, so we've been busy working on the PFS. We've been a little quiet in the market, but the reason for that is we've got our heads down. This is a huge deposit, right? I mean, like, to put it into context for especially those in the UK, I always tell them it's like 2 Manchesters, right? That's the size of this thing. We're not going to figure out how to mine it, which sequence to mine it in, how to transport it to a plant, where that power is going to come from, how are we going to get it on a rail to port, and who are we going to sell it to overnight, right? So that's taking a while. And the last thing we want to do is put out rushed, potentially not robust figures out there. There've been a lot of changes since the scoping study, both in terms of the macro environment, the supply demand for these things is just, on the supply side, both rutile and graphite are in huge, or will be in huge deficits. And on the demand side, I mean, everyone wants this stuff, right? They're critical minerals, no matter who you look at. So we're busy making sure what we put out as a PFS in the coming months is we can stand behind those figures.
Okay. And so the timing is what though? When do we see those?
So we're hoping Q3 this year we'll have, August, September this year we should have a PFS out.
I'm paying attention because the numbers, the capex is quite low in relation to what the NPV looks like, which is interesting. But you're going to need to kind of get this thing financed and so forth. So we're moving through the PFS. That's when people start paying attention to the numbers properly, I guess, because they're a little bit more certain in that sense, or certainly a little bit more accurate. You're going to have to start conversations with regards to the graphite component. There's a big ecosystem in the UK, Europe, and there's a big ecosystem in Asia leaning into stories like yours. So do you feel confident in the nature of those conversations with regards to whether it be offtakes or debt or otherwise for a project of this size?
Look, very much so. Financing a project is kind of bread and butter, given my background as a banker. Done this multiple times. So it's always something that you want to start putting the pieces of the puzzle together very early on. And we've made no qualms of telling the markets that, we've signed an MOU with Mitsui, for example, out of Japan, a huge trading house there. Japan has recently talked about how it needs to secure these critical minerals. It's put something like $24 billion into play to just secure graphite, cobalt, lithium, all those good and fun battery minerals right now. So, we continue our discussions with our off-takers right now. It's at MOU stage because we don't know what we're going to ultimately produce. So they don't know what they're ultimately going to be buying from us. But as we de-risk the project and get closer to that figure, that will slowly become a binding contract. Within that, we have a strategic partnership for them to market our product throughout Asia as well. So really, we've got this, we've signed the MOU. We're looking at Mitsui almost like this big brother, because this is a huge deposit. This is not something that a small exploration company with £100 million market cap is going to get off the ground, in the next few months. As they say, God is on the side of the biggest battalions, right? And so it's much easier for us to be doing this with a strategic partner or someone there that can hold our hand as we work our way through that ecosystem.
Right. And so what can your shareholders look forward to seeing in terms of you driving that share price? Obviously, a PFS is a big moment. How quickly will you move through the following phases with or without this kind of strategic partner and their balance sheet?
Yeah, so look, we'll be hoping for updates to the PFS as we progress that between now and Q3. So we'll have updates throughout that. PFS comes out. We'll be looking at further offtake arrangements. We'll be doing a lot more test work around the graphite, putting it into a specific battery, seeing what that does to it. So a little bit of test work around the rutile, although we're pretty damn sure that is very hot to trot. And starting work on potential thoughts around pilot mining, thoughts around obviously getting the BFS done. We want to be looking at being in production in and around 2026, right? So the fact that we found this, or we tripped over it in end of 2018, and projects this side, it takes 10 to 15 years to do the exploration, then it takes 10 years to build it. As opposed to us, we've done it, we've explored, we've found what we have, we're putting numbers around it, and that's within the space of like kind of 6 years before we start to build it.
And what about the kind of, we talk about this of, North America, jurisdictional risk, right? North America is, I guess, experiencing some of that, some of those hiccups as well. It's not just, South America with, social unrest or and social license, etc. But Africa, so far, it's proven to be quite a good place to kind of get the whole licensing and permitting component through. Given the size of this and given it's all near surface as well, what sort of hoops are you jumping through on that front?
Look, for us, you're right. Given the size of this, things like social, things like resettlement, obviously are at the forefront, and they drive everything we do. But because it's so big, it's not an issue for us. If there is a village, if there is cultural, monuments or anything like that, we just mine somewhere else. Those numbers that I gave you, that $1.5 billion of NPV, that's from only mining 30% of the resource. So when you start thinking about, well, if you were to, you were able to even double that, we're talking astronomical numbers here.
That's interesting. It's interesting because at some point, obviously, as you move through the economic study phases, you're going to work out that the best way to optimize that, starting that, and then obviously self-funding it, moving on, and obviously managing that cash flow component and free cash flow component. That's actually, I had appreciated there was only 30%. Okay, a big number. Okay, so look, I think. Let's just park it up there. I just wanted to kind of get in, have a conversation with you, now, so see what you've been up to. And I can tell that you've been up to a lot. We'll look forward to kind of the kind of Q3 because that's not so far away. We're mid-June. Yeah.
It's, it's not. And it's why I think Matthew, that's why we haven't had this face to face for a while, because the whole team's been heads down, making sure that we get the right numbers. We don't want to be one of those companies that rushes out of PFS only to optimize, re-optimize, enhance, re-enhance, and before you know it, you've wasted 3 years when you could have just been doing the definitive feasibility study and getting on towards FID.
Well, but to be fair, I think you're in the lucky position that it's all kind of near surface and it's just open pit, with very little overburden as well. So it's a very simplified mining process for you, and then it's a case of processing with the metallurgy to kind of process it, be the most efficient you can be. So yeah. Well, like, Sapan, I appreciate you coming on. I know you're busy running around, so we'll let you get back to it, and we'll speak to you soon. Okay.
Brilliant. Thanks, Matthew.